Welcome to weekly view on markets. Markets rallied at the end of the week, that is on Friday, after RBI cut the interest rate by 0.5% and CRR by 1%. All indices gained around 1 to 1.5% for this week. There was buying in all sectors. Rate sensitive sectors like realty, consumer durables, auto sector, banks and NBFCs gained the most. Bank Nifty closed at record high level of 56,578. Charts indicate a bullish trend, and this bullish trend is likely to take the markets to higher levels in the coming week. RBI statement on macroeconomic stability, inflation, and GDP growth prospects in the coming year is very optimistic. This will help the markets to go to higher levels in expectation of earnings growth in the coming quarters. Investors should remain invested and they should be patient to reap the benefits from the growth in the economy. Now let us look at the performance of indices. Nifty closed at 25,003. So Nifty crossing and closing above 25,000 is a psychologically very good thing for the markets. It denotes a bullish sentiment in the market. Bank Nifty closed at 56,578. It gained 817 points, that is 1.47% for the week. Nifty Mid Cap Index closed at 59,010 with a gain of 707 points, that is 1.21%. Nifty Small Cap Index closed at 18,582 with a gain of 0.81%. India VIX is quite steady at around 14.63. Almost all the sectors gained for this week. Realty sector gained the most after RBI cut the rates. Metals gained about 1.9%. Private banks, NBFCs, auto sector stocks, consumer durables, commodities all gained more than 1%. Manufacturing, public sector companies, infrastructure, PSU banks, oil and gas sector, healthcare, information technology all gained between 0.5 to 1%. FMCG sector gained about 0.3%. Media sector only slightly lost with a minor loss of around 1%. Otherwise, we have seen buying in all the sectors. Most of the sectoral indices also closed with gains. So this denotes a bullish sentiment in the market, and the upmove in the market is likely to continue in the coming week also. Now let us look at technical charts. This is the daily chart of Nifty. As we can see, Nifty is still in the range of 24,400 on the lower side and 25,200 on the higher side. So Nifty is expected to break above this resistance level of 25,300, and after that Nifty may go to all-time high in the coming weeks. This is the chart of Nifty Mid Cap Index. Mid Cap Index has crossed the crucial resistance level of around 58,800, and you can see it has closed above this resistance level. So now next resistance for mid cap index is at around 59,800, and after that we'll see new Nifty mid cap index going to the all time high of at around 60,500. This is the chart of Nifty small cap index. Small index has got resistance at around 19,000, and if this resistance is crossed, then we will see small cap index going to the all-time high previous level of 19,700. This is the chart of Bank Nifty index. Here we can see Bank Nifty index has given a flag pattern. So the rally started from around 49,300, and there was a vertical rally till 56,000. After that, we have seen a consolidation of around 1 month. And now Bank Nifty has given a breakout above this consolidation level. So this entire pattern looks like a flag pattern. This has got highly bullish implications. So I will not be surprised in coming weeks if the Bank Nifty crosses 60,000 mark based on the technical pattern that it has given. Now let us look at some of the market fundamentals and macroeconomic fundamentals. Overall macroeconomic fundamental parameters of Indian economy continue to remain very robust and strong. RBI forex reserves is at 691.48 billion US dollars for this week. It is down by 1.4 billion US dollars. Foreign exchange rate is at 85.64 rupees for $1. That is also quite steady at around these levels. Dollar index is at 99.33. Brent crude price is steady at around $66.65 per barrel. Gold is at 97,051 for 10 grams 24 carat. FIIs have sold 3,565 crore during this week, but on Friday after RBI policy, they have bought more than 2,000 crores. DIIs bought 25,513 crore in equity during this week. So whenever there is a dip in the market, the DIIs are continuously buying into the Indian markets. So this shows that the domestic institutional investors are aware of the good prospects in the Indian economy. That is why they are buying. GST collections for the month of May has come above 2 lakh crore. It is 2.01 lakh crore. It is up by 16% comparing to the previous year. So good GST collection shows that industrial and commercial activity in the economy is quite robust, and tax collections are going up by around 16%. It's a good indication. Auto sales for the month of May 25 is also up, but auto sales are slightly sluggish. Passenger vehicle sales is up by just 1.4%. Two-wheeler sales is up by around 2%, and commercial vehicle sales is up by 7.3%. So it is good that the commercial vehicles which are used in industry and road transport and logistics is up by 7.3%. This is a good indicator that industrial and commercial activity is picking up. PMI manufacturing index for the month of May is at 57.6, which shows expansion in the industrial activity, and services index is at 58.8. This is also a quite good figure. So all these indicators the sales of automobiles, GST collections, PMI index, all these show that the economy is doing well. RBI in its policy meeting has cut the repo rates by 50 basis points, that is 0.5%, and CRR has been cut by 1%, that is 100 points. So this is going to bring down the cost of capital for the businesses, and their bottom line is going to improve. The earnings of the companies is going to improve. And RBI has given inflation forecast for next year at 3.7%, GDP growth projection at 6.5%. RBI has exhibited a lot of confidence in the economy and given highly optimistic policy statement, and they have expressed their stance to give boost to the growth in the economy. So this all will help the companies to improve their earnings, and that will support the markets at the higher levels. Charts also indicate bullish momentum and further upside in the markets. So considering all these things, definitely there is going to be further upside in the market in the long run. There may be short corrections for a small period of time, but these corrections give good opportunity for investors to buy. Mutual fund investors should continue their SIPs. They should not stop their SIPs. They should be invested in markets for a longer period of time to get good returns. This is all for this week. If you like my video, please subscribe to my channel. You can share with your friends. You can ask your questions. We'll meet again next week. Thank you.